What's up? I'm Dan Fredenberg, and this is another chance encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. I'm joined today with Gina, and is it Weibel? Is that how you pronounce it, or is it Weibel
Yes,
or
Bible.
Weibel? Excellent, great. And I got some great news for you today, Gina. Today we are joined by my very favorite audience member. And why is my favorite member of the audience here today? It's because this is a chance encounter where I interview commercial real estate syndicators. That means investors, buyers, sellers, all that sort of thing. And you might ask, why on earth would you do this? Well, the answer is if you've ever heard of an off market deal or a private deal or a 506B syndication, you probably know that you need to have documentation of your prior substantive relationship, or else the SEC will get ants in its pants. I have to say that slowly because last time on the captions it said something like the sex ants or something like that, and that has nothing to do with the SEC. But before we continue talking about compliance and put everybody to sleep, my main point is I want to make sure that you learn how to effectively communicate on the subject of commercial real estate, and in doing so, understand how my guest intends on fitting into those deals. But before we get too deep into business, Gina, do you want to say a thing or two about yourself?
I live in Washington State currently, and I have 4 kids.
Excellent, excellent. That's always reassuring. You know, we know why people are doing things, which is, of course, the first segment in this format. But before we get to that, I gotta say, but wait, check your rate, Gina. I don't know if you have the ability to see through the camera and into the user's device down there, but there might be this hideous subscribe button, and if they just click on it, it goes away, and okay. It's a dumb joke. Anyways, the 5 distinct motivations. I've spoken to all sorts of different syndicators, investors, deal sponsors, and whatnot, and everybody has their own unique reason why. It's important to know what that why is as a syndicator or an investor, because these deals take months to close and they take years to go in a full cycle. So the idea is you have to find out what exactly is going to keep them sticking around. And these are the 5 I found where each person's category fits in very neatly. So the first one is preservation of purchasing power. What's that? Well, some people already have a portfolio of assets, and the way that they make ends meet is from the proceeds of ownership. If you're in that kind of situation, you might ask yourself, why would I go through all the hassle of another deal? And there are a couple circumstances. One is if inflation is rearing its ugly head, then it's going to eat away from the purchasing power of the cash flow. So it's going to be time to make another acquisition. The other time is when they can buy at a steep discount, like if there's distress on the property or if there's an asset crash. That's not where I'm at. The spot where I am is it hit me that it's time to start trading time for wealth. And that crossed my mind because of my background in web technology, specifically selling things online, facilitating those online funnels and the mass marketing with millions of emails sent every month. I started doing that for a guy who was doing 10 single family house transactions every single month. And when I learned how they are actually, they're taxed way less, I figured, how do I pivot from being a high salary, high wage earner into where I'm being rewarded in the form of deployed capital, AKA equity, and then get the benefit of equity multiples. So that's what I'm all about, but that's a little too subtle for some people, especially youngsters. What the youngsters tend to like is they want to take control of their schedule. Maybe that means hustle really hard right now and then take it easy when they're a little bit older. But maybe it might just mean that they want to work fewer months per year or fewer weeks per month or something like that. And that's all great, but it's not everybody. Some people are just plain ambitious, so they want to buy their entire hometown. They want to make sure that their great grandchildren never have to hold a day job. And that's why they're going to be hustling into their 90s, which is pretty handy if you're putting together a team. Just like the last group, though, they've, unlike the previous one, it's not about ambition, but they've found a sector of society, or maybe it's animals, maybe it's the environment, maybe they want to send people to space. But regardless of what it is, if you want to have a really big impact, there's a financial component to it. And that's why some people are making these acquisitions. So, Gina, of those 5 different motivations, what combination of those jumps out that you think describes you best?
Probably the trade time for wealth and the fast track retirement.
All right. I love it. I love it. But of course, there's plenty of risks involved. It's a business and commercial real estate. It's a very mature one at that. And if you've ever been involved in one of these off-market private 506B deals, the securities attorney who really should have been involved in the mix, they should have insisted that you fill out a questionnaire with all sorts of super duper invasive financial questions. And when I went through that questionnaire, there was one in particular that I thought it didn't tell me any information that was usable. I know, Gina, you were mentioning your teaching experience in the past. So I'm sure you feel me where if somebody says, oh, what's your tolerance of risk? It's, oh, lots and lots, or just a little sprinkled on top. It's not all that helpful. So I made my own question, which is a fill in the blanks question. And here it is. There are many popular investment asset classes, but I think blank is too risky. So Gina, it can be inside real estate. It can be outside real estate. What's too risky for you?
Cryptocurrency.
Cryptocurrency. That definitely makes sense. It's, and do you want to say a reason or two why?
I just don't like the whole concept.
The whole
Uh,
concept, yeah. Mm-hmm.
it feels like multi-level marketing for men, which I also don't like multi-level marketing.
Right. Yeah, it really reeks of Ponzi scheme for sure. But when you're talking about real businesses, there are numbers involved. And to be completely frank, not everybody on a commercial real estate deal is the underwriter. Not everybody's going to be a numbers person. So they're going to like some numbers more than others. All numbers will definitely matter. But just to try and hone in on which metrics my guest is particularly interested in, this will really help. So I've got a few of them here, and for anybody in the audience who only has the audio on, I'll read them out. The first one is cash on cash. Second one is IRR, then cost per door, then net operating income or NOI, going in cap rate, loan interest, average income, amortization period, market versus in place rents, population growth, so different demographics like that in the area near where the property is located, the sponsor record, as in how many deals have already gone full cycle, for example, and then the waterfall or split between GP and LP. So out of any of those numbers there, are there any that really pop out to distinguish one deal from another for you, Gina?
I would say IRR and population growth.
Excellent. I love that answer. I'm just eating it up like a subscribe sandwich. That's not the smoothest segue I've ever done, but isn't that thing intense? It always tells me it's time to bring out the Dan Does Deals Commercial Core Competency Cube with the 6 different roles in a commercial real estate deal. And if you're sitting there going, wow, I wish I had one of those, well, you can go to dandoesdeals.com and it's free. And I actually want you to print it out. So I made the cardinal sin of marketing, which is I don't even ask for your email address. You should always ask for contact information in return for your freebie. But the main thing is I want you to print this out and I want you to practice talking and describing these different roles, because I think if you want to get involved in commercial real estate, it's going to hinge on your ability to effectively communicate on it. And so it just takes a couple minutes. I go through all 6 sides, and this way you'll also be able to tell how my guest fits into these deals. And when everybody starts, they are repositioners of sorts, because they're looking at deals. They're figuring out which property is going to be the next acquisition. And they call them repositioners because they have to do all this paperwork. What's this paperwork, you ask? Anyway, the paperwork is called underwriting the deal. It means you're doing the math, you're doing the arithmetic, you're figuring out, first of all, is this property even making the amount of money that you're being told it makes by the broker or the seller? Because, but a repositioner has a multifaceted job for sure to tie all the different pieces together. One of the more unusual ones about repositioning is the financier component. They have to have a wide network of lenders, because if they can secure a more advantageous loan, that goes straight to the profitability of the building. So that's why they have to know all sorts of financiers. And just to be clear, a financier is someone who only deals with paper, people, and money. And when I mean people, I don't mean residents. I just mean they just deal with the representatives of the GP team. So that's a little bit subtle for some people, but the first place that the repositioner is going to be looking for that upside to make the property more profitable, it'll be in the operations, making them more efficient, stopping those Benjamins from going down the toilet, because we wouldn't want that. But of course, there's more to operations than just unclogging toilets and collecting rent and mowing lawns. Me personally, my contribution to GP teams and asset management on properties that are 100 units or more, part of it is just playing from being handy. The other parts are just the digital web application and page development. But the bigger one is, if you understand that this business, really vacancy is the enemy, then even if you are outsourcing your property management to a third party, you still need to have somebody with some marketing chops on the team so that you can get those units filled. But operations, there's only so much efficiency you can do. So the next place the repositioner is going to look is to get a contractor team involved, to do a value add. In other words, they upgrade the apartment units. And the reason for that is because the next resident should be more than happy to pay more in rent than the previous one, because the actual units are nicer. But you have to be super careful when you're getting a contractor team involved to upgrade the units. You don't want to be gold plating toilets. You don't want to be using substandard parts or dragging your heels and taking too long. So if you're like me, and I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground, people who can be there in an hour or two, because I'd still be stuck at an airport in an hour or two. So that's definitely not going to be me. But when the repositioner ends up assembling this team and they find a property, let's say, hypothetically, let's say it's you, the repositioner is you. You're a physician or an engineer or an attorney or something, and you figure you and your pals can put together $100K each or something like that and take over the local building. Well, when you turn around to the financiers and say, hey, I found this great 350 unit apartment complex, it's tens of millions of dollars. Y'all got tens of millions of dollars you want to say, lend us? Well, the problem with that plan is you need a sponsor or KP. What's that all about? See, your team is not going to be eligible for the commercial loan unless somebody in the fold already owns a similar asset. Okay, so that means if you want to take over a 350 unit apartment complex, somebody has to already own a 350 unit apartment complex. Now, on top of that, you need a certain amount of liquidity. And then among the team, you need a balance sheet of at least the amount of the loan. But if you have all those pieces, you got yourself a commercial real estate deal. So Gina, as far as these pieces go, I imagine like pretty much everybody's some degree of a repositioner, but what boxes do you see yourself checking?
Repositioner for certain.
Okay, repositioner. That's easy peasy. So the next part I have to ask about then is the buy box. And when people are asking, hey, what are you looking for? What's your ideal property? We're really asking about 3 things. The first one is geography. Which states, which counties, possibly even which neighborhood. It's definitely going to matter. The second one is size. And most of my guests on this show, they're in multifamily, which is apartment complex investing. And the way that you define size in multifamily is by unit count. And it's important because the kind of group that will be taking over 10 unit apartment complexes are completely different from the ones who are taking down 150 unit apartment complexes and up. So that size definitely matters. Other forms of commercial real estate, it'll be in square footage or something like that. But that size will still matter. But the third one, I call it desirability. A lot of people call it class. I don't like calling it class because it's two completely separate things. The first one is condition, and then the second one is the area. So when you're talking about the condition, it's how old is this building to begin with? Is it all beat up or is it in great shape, a brand new build? And then as far as luxuries and amenities, how many are there? Or is it really just really a not very nice looking place at all? So that's the condition. But the area, we're talking about what's the crime rate like where the property is located? What are the school districts like where the property is located? And then, of course, there's the classic saying location, location, location. What that really means is traffic, traffic, traffic. And what it means is that if there's enough traffic that goes by that property on any given day, it's more desirable. So it's going to be worth more. But both the area and the condition of the property, they're both ranked the same way as in grade school, where you got A plus at the top and then A and then A minus and then B plus and so on. So Gina, as far as your organization or your own investing strategy, what's easier to say yes to in those three ways?
Well, I look for 20 plus doors, so 20 up to 200 probably,
Mm-hmm.
and anything in the B or the C plus category with value add opportunities.
Mm-hmm.
I haven't zeroed in on my geographical area. I've done some investing in areas that are emerging markets. So I'm looking to join teams that are in emerging markets. I look at population growth and job growth. And yeah, I haven't really narrowed myself down to a specific market yet. I
Mm-hmm.
have a few properties in a few different areas, but I haven't yet decided what area is mine.
Mm-hmm. Mm-hmm. I love that. I love that. I love your transparency there. My next question, though, has to do with people. And, as you can see, there's different people involved. My favorite thing about it is because nobody's going to be all six sides of this die for any meaningful amount of time. It really means that people are really eager to make referrals, build new teams. And even though that's the case, one thing I ran into with my tech skills and marketing skills was there are some people I can help more than others. And specifically, it tends to be upside down sponsor KPs, the people who already have a real estate foundation built. Those are the people I can help a lot more because they're going to be dealing with bigger lists, more automations that need to be done. And let's face it, when you're first getting started as a local or a repositioner, you need people who are putting in 80 to 120 hours a week. And that's just simply not going to be me. That's not how I'm at my most effective. So it's the sponsors and the locals I tend to want to meet more than anybody else. But Gina, I don't know if you have any deals on the go. If you have any 506B deals, be careful not to mention them specifically, especially because financier is one of the labels on the die. But who might be out there that you're most eager to speak to? Is it more sponsors, more repositioners? Who should reach out?
If somebody has a team that they're putting together and they need someone to do marketing, I'm really good at raising funds.
Mm-hmm. Mm-hmm.
So I'm really great at talking to people,
Mm-hmm.
finding people to bring on.
All right, excellent, excellent. So then, and as far as how to reach out, then I've got this really distinct last name, so it makes it really easy to find me, especially on LinkedIn, which is the platform that I spend most of my social media time on. So make sure you connect there. But if you have your phone handy, you can scan this QR code right here, and that brings you to the FAQs page of 506BME, which is the platform where I offer the IT services that are required if you want to document your substantive of relations in terms of anybody who is in a syndication with you. You want to make sure that you have proof of their level of sophistication, appetite for risk, core competencies, and things like that. But Gina, if people want to reach out to you, email, phone, website, social media, how should people reach out?
I'm on LinkedIn with my name.
All right, excellent, excellent. So you can find her on LinkedIn, and that brings me to my last thing, and it's actually not for you, Gina. It's for you in the audience. It's my public service announcement. If you've been watching this episode and experiencing searing pains in your eyeballs, maybe like migraine-like symptoms, I'm sure it's because of the hideous subscribe button that's right there, and you can get rid of it for free. And okay, the reason why I want you to click on it is because if enough people click on the button, then YouTube will start to pay for these videos instead of me. And I think that would be amazing. And the trade-off for you, just so we're totally clear, my videos might show up on your list of suggestions. You can go ahead and ignore those suggestions because, quite frankly, I just appreciate the fact that you spent this time with me. Just like Gina, I appreciate you joining me today. This has been great.
Yeah, no problem.
Awesome. Thanks. Hey there. Are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506B or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, all that kind of stuff. So I hope to hear from you soon. Thanks a lot. Bye. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah. That's funny.
Nice meeting you.
You too.
506BME, everybody.